Hello everyone, my name is Reggie Williams and this video is about stock trading. One of the reasons why I felt like I needed to make this video, through my journey of being a trader, I learned everything from YouTube. I mean, my background is, I have a background in finance. I'm an entrepreneur. I actually own my own appliance business. And so I'm progressing into being more aggressive in stock trading. One thing about 2020, it's awakened a lot of us to stock trading because the market is so volatile. So before COVID or 2020, the stock market, you would trade, but it will take forever for a stock to move because the volatility wasn't there. There were certain events in which it was, but for the most part, you had to wait, forever for the stock to move, and that was just slow money. So now with volatility, which means a lot of buying and selling of stock, you can buy a stock and it jumps to like $5 in a matter of days, a day or two, sometimes same day, sometimes the same hour. Um, so it has awoken a lot of the people who wanted to trade. Also, brokers got a lot easier, in which before you had to pay $7 every time you placed a trade. So that was a little discouraging because automatically you make a trade and you're negative $7 just from the get go. So that was a little discouraging too. So the market has changed. It's got a lot more retail friendly, and retail traders are basically me and you. The little guys who are out there working working jobs and trying to grow our money. So this video is about things I wish I had known when I first started trading. Now I'm no millionaire, but I pretty I got a good concept of the stock market. I've got a nice strategy that I use in my my next few videos. I'll try to consistently show trades that I'm making, but at the same time I don't want you to mirror my trades. That's the worst thing you can do. I mean, there's a lot of guys on the internet telling you about their trades and stuff, but it's about how to trade it. Because literally, you can't really follow someone's trade unless they were sitting there right next to you pushing the buttons for you. Because you can recommend a trade, but it's about the entry point. You got to know your exit point. And it's about your own personal goals. If you are, if you got a big lump sum of money and you work a job and you don't have time to be looking at a screen all day, then you pretty much just want you want to buy something and keep your money in there and watch it grow. That's the difference. That's a style of trading. And you have some of us who wants to be income traders, where we make a trade and then sell it next week for a profit and then do it all over again. Next week, next day, whatever. Swing trading or day trading. So that's one thing I through my journey of becoming a trader, learning from YouTube. Even my appliance business, I didn't have a mentor. I didn't know anything. I learned by watching YouTube videos, and then it turned into a very good business for me. So in the meantime, I've always traded in between, but that's been my primary business. But now that's I'm at a point where it's going and it's sufficient and doesn't require as much of my attention and time. And so now I've been focusing more on my stock trading, and I've got much better at that. And I feel online there isn't a lot of guys that it's pretty much everybody's rich. Everybody's a millionaire, and they're teaching you. Either no matter if they really are or they're not. But I don't see a lot of middlemen. I don't see a lot of middle class people saying, "Hey, these are the mistakes I made, and this is what I did, and this is where I'm at." So that's me. I don't have a huge, $1 million account. I'm doing pretty good, but so I'm at a point where I feel at the point I'm at now. Obviously, I could still grow. I'm at a point now where I've made all the major mistakes, and I wish I had a mentor there to hold my hand or be next to me on the computer and say, "Oh no, don't do that." So anyway, I'm gonna go through a few steps that you guys need to know if you're a beginner trader, if you are a middle range trader. Listen to my entire video. I'm gonna go through a lot of good nuggets of things I've learned along the way to get to where I'm at now. And I'm still on a journey, man. I still want, I'm still working on retirement. I still work my business, but I'm working. I smell retirement close. Thanks because of the volatility in the market right now. So I got a few notes here because sometimes I can ramble, which I've probably already done. So I'm going through your progression as a trader. So one of the first progressions as a trader is you start trading and you see all these videos of guys, hey, I turned $500 into $50,000. That's true, but it's about the steps in between. Quick analogy. I worked at a gym in sales for a few years in my 20s. And I remember when they was telling us the story about how the gym, this gym is a juggernaut. Like it's 100,000 square foot facility. The membership is like $200 a month, but it's all decked. It's like a country club. It's really nice. But they start off in a little storefront. And when we were going through orientation, they told us like, hey, we went from this storefront to bam, this $1 million facility. And I'm like, well, what was in between? You don't just jump from, a storefront next to a Dollar General to having this massive gym, massive building. So I appreciate the stories in between how you got there. I know they probably got some sort of venture capitalist or or an influx of money or somebody that bought into their idea of having this mega gym. But anyway, the point is, I'm the story in between. So that's the point of my channel right now. So your first step you're going to go through as a trader is excitement. You're happy. You're like, man, I can trade. I got a little bit of money. I do recommend you start with $5,000. Now I don't say trade with $5,000. Start with $5,000, but trade with $500. I'll get into that later. But you're excited. You think like, man, especially if you work at a job where you're just tired of working there. You're tired of dealing with people. And even my own business, man. I mean, I got into my business because I got tired of dealing with office politics. I'm like, so now I'm kind of direct to the customer. I sell my product directly to the customer. I'm my own boss, and there's no politics involved. And I just, you pass or fail. And that's what makes stock trading perfect for me too. Anybody else that's entrepreneurial. You're excited because you're like, man, all you got to do is you sit at home or a beach or wherever. You can use, especially nowadays with technology, you can use your cell phone. I use both my cell phone and my computer. But the other day I took my family to Disney and I was in line for a ride. I was making trades. It's awesome. So that's very exciting. It's freedom. You can smell the freedom. And I think a lot of us are attracted to that. Not having to report to a building every day. You can do this no matter your ability. You could be, if you're a mechanic and something happens to you, you can't go to work. You break your leg or something, and you can't go to work. You can always trade. No matter if you have a disability, no matter if you you be homeless. As long as you got a smartphone, you went to McDonald's, use their Wi-Fi. It's all it's endless. So anyway, that excitement gets you want to get started, right? But then after the excitement comes the hard lessons. One of those hard lessons is you start off by buying equities, because a lot of the guys online will tell you, see, we're in a new age of trading. The old age of trading was, you have rich guys that have piles of money and didn't want to have it sitting in a bank making almost nothing on interest, and they'll put it in the stock market and just they'll buy AT&T or somebody, get dividends and all that, and their money would make money for them, but they had other incomes, but with retail traders, that's not us, man. We don't want our your $5,000 to sit in an equity, just to sit in the stock market, and then next year, you've made, it's up $500, which is a good return, 10%, but we want more, and also you have the temptation, especially if, you're middle class, rainy days come up, man. You have a rainy day fund, but damn, it's like it rains all the time. That fund always is getting tapped into, so you have the temptation of having to take out your investment money to pay bills or to pay rent because, you might have lost your job or you fell on hard times, man. And that's tough. So that's the type of trader I am. It's about income. Get in a trade, get out of a trade, and it's mine, and have my money work for me that way. Work with, but it requires a lot of work. So it's hard to work a job and do it based off my style, which I'll get to in other videos. But as far as the progression of a trader, you're you're gonna hit hard lessons where you buy an equity. Equities mean stocks, shares of a company, and then you see another one that grew more. Or you see this is so many options. And I used to be in sales. I spent 13 years in the car business. Most of those years in finance, but I started off as a salesperson. And you always want to, you don't want to miss a sale, or you don't want to miss an opportunity. And sometimes as a salesperson selling cars, if you show people, like, if you take people, one of the worst things you can do is take people out on a car lot and show them all these options, because they will get paralysis by over analysis. There is so many options, they don't make any choice because you're confused. So you kind of qualify. It's a long story, but you kind of qualify them. You show them like one or two cars. Anyway, stock market's the same way, man. It's so many options. There's so many different companies to choose from to buy into. And you got these guys who are old school who say, okay, but you're buying into a company and you're a shareholder, and you want to buy that company and keep your money there. That's a good strategy, but I feel like a lot of people online that are teaching classes teach based off that strategy. But as retail traders, I think we want to see a faster turnaround in our money. So I think this is the age of swing traders, where we want an income. We could probably give a damn about the company, be honest with you, as long as the stock price goes up. And that's been shown through specs like NIO, for example, and all these companies that, based off of old school, read the balance sheet, see, make sure it's a good company, see if they're making money, then you invest. And we're more spec. We're more like, hey, man, I think, a lot of us retail traders, we're the generation from where we're like, man, I wish I could get in on Amazon when it first came out. Man, I wish I could get in on Google when it first came out. So that's our mentality. We're like, man, NIO, man, they're not showing, NIO or Tesla. The books may not, Tesla's good now, but at a certain point, you're like, man, the books aren't showing them making profitability, but we know they will be, right? That's what we're speculating on. We know they will be, and we want to get in now rather than later. We don't wait till later when the stock, when it's a $400 stock and then shoots up to being a $1,200 stock, and now we're showing good books and balance sheets, and then you want to buy, So that's where we're at. And so that's why I beware of training. And I haven't purchased any training. I'm old school. I just go through YouTube, and I learn from YouTube. I learn from my mistakes, which kind of equivalates to the same, an education expense. But the problem I have with buying courses is that I don't know what you're teaching. They give previews, but I don't know if what you're teaching fits my goals, right? Like you can, especially now, because a lot of old school traders, buy this company because they have good, the good balance sheet, the EBITDA is good, and all that, yeah. But what about my money? That's what's most important to me. So I just feel like the education out there is flooded with these old school guys who are buy a company, keep your money there. You see what I'm saying? Which is good if you have a lot, like if you got, over 100 grand, 200 grand you're working with, that's a good strategy. But if you got, if you're less, to me, if you got less than $50,000 to work with, I think you do a little bit of swing trade. You do a little of everything. You do a little swing trading. You do some buying of option stock stuff. So I don't know. I haven't seen a course that's like that yet. So anyway, those hard lessons will be buying stock and it goes down, and you get so impatient you sell, and then it goes up. Those are the hard lessons. Or you get into options trading because it's fast money, and you don't know about the options Greeks, such as, like when I first started, I did equities, and I would jump because I would say, oh, this one looks better. I'll jump to that one. And you do all this jumping, and the next thing you know, you're down to zero in your account because you're jumping stocks and you're buying high. And that's usually the case because you hear about, oh, this stock jumped $20. You're like, ooh, if it jumped 20, it might jump 40. Or you have a situation like Kodak, and you think like everything's a Kodak. Like Kodak, I think it started at like $10, and then jumped to like 15, and then jumped to like 60, and in your mind you're like, oh, even if you bought at 60, you're like, oh, it's gonna keep going, it's gonna keep going, because your head, you're willing it to keep, you're trying to use the force, and then it tanked. So those are hard lessons, and so it takes experience. It takes a lot of experience, and it takes hard lessons, unfortunately, to avoid those traps. So hard lessons. Another progression of a new trader is you feel like a failure after all the hard lessons. Most of us, I mean, I think especially a lot of us that are like adults, have families who's had careers and a career and had a lot of success. These are usually the people who have the access money to put in the stock market, right? And we've had success in our lives, and we've been right according to our success, right? Our success has validated us as being right in our opinions and our decisions. And so you get into the stock market and you're like, okay, this is a good company. I see it moving, boom, and you got these check marks, you buy, and as soon as you buy, it tanks. And I can tell you, I've been pissed a lot. And sometimes I felt like, man, is this personal? Like, you're like, man, this thing, okay, even you get to a point where you're like, okay, I'm gonna let it go up. I'm gonna wait. It goes up some more. I'm gonna wait. Now let's see what happens tomorrow. It keep going up. All right, I'm gonna buy. Bam, it tanks. Like, you're like, okay, the system know what, so anyway, you feel like it's rigged. And it's not. It's just that you're playing, the house knows more than you. The system is not set up for you to make money. It's not. More people lose money in the stock market than people make money in the stock market. And that is what creates a market, right? You gotta have losers and winners. Again, I hate to use casino analogy because it's overused, but it's true. The house always wins. And if you go into trading stocks with that mentality and you know this, it makes you a better trader because then you know the traps, right? You're like, okay, you see something gapping, or like earnings. I mean, earnings is a good trap where you see a company blew past their earnings estimates and the stock fails, the stock drops, right? People are selling. So you're fighting the market makers. You're fighting big institutions, and you're fighting people that know what they're doing. And even people who are experts lose money in the stock market, but it's about losing more. It's about winning more than you lose. So fight. I'm just letting you know what's coming, and so you can be prepared for it and not quit and not give up. Because you will be. I mean, at those times I felt like, man, is this for me? Maybe I'm just not smart enough to do this. But you stay resilient, you keep going. You're gonna get to a point where you lose money, and so that's why I recommend paper trading number one, right? Paper trading. But one of the negatives about paper trading, it's not as exciting as real money, or it could be you're paper trading, and then you start using real money, but it's not the same market because the market is always changing. So stock trading, I put in the realms of I like to compare to playing. I play football. I play college ball, and playing football is like the New England Patriots, one of the most winningest teams in NFL history. So how come everybody else doesn't have their same playbook? How come everybody else doesn't do this? I mean, you could just watch their plays and just copy their plays, right? No, of course not. So same way with stock trading. You can see people what they're doing. If you copy them, but you don't have any context, you don't. So it's not about. It's about applying the strategy. So Bill Belichick's playbook, he can give somebody his playbook. Now they will use it against him in plays, but see if somebody had a hold of Bill Belichick's playbook, they would use it for their defense, right? They want to give it to the offense and say, hey, let's do this because it works for them. No. Why? Because it's different personnel, right? The locker room has a different atmosphere and personality. There's so many variables that are different in that, and with their success has worked for their organization, and it took them a while to get there. They didn't start there on day one. So stock trading is the same thing, man. You just got to absorb all the information you can, and then tailor it to your life and to your personality. Another example, when I was in the car business, a lot of you have these great salesmen. Even now, salesman doesn't mean rip people off, nothing like that. Because actually, the people that actually go in and rip people off don't last in the car business or any sales position. Because it's short lived and it's a narrative that Anyway, but the good ones that push out units have great customer base. They have referrals, so obviously they're not ripping people off if they're getting referrals. A lot of them will get referrals, and they will have this personality, man, that you cannot duplicate. I know one guy, man. He always had people laughing, always had them laughing, man. And it was contagious. So everybody would try to be like him, and they couldn't pull it off. And like he should shortcut the process and all kind of stuff, nobody's gonna get away with. He got away with it because he did the numbers, and I think he got referrals, and so people referred him. So there's a lot of confidence there and trust. Um, so mirroring other people isn't the way to do it, but it's about taking the information, taking the playbook, and catering it to your abilities and your talents. Because if you try to mirror somebody else, you will feel like a failure because you're like, man, it worked for him, but it's not working for me. Then it must be me. You get down on yourself. So it can be a very emotional roller coaster being trading stocks. So, but definitely look for help. This is another progression of stock trading. I kind of touched on it a little bit already. And you're going to look for help. You're going to be like, okay, let me look at videos. And I can give an example on when I started my appliance business. I got out of finance. I just got tired of rat race. I said I wanted the easiest path to entrepreneurship that didn't require a lot of money. And selling appliances was one of them. Buying used appliances, because people will just throw away appliances over the smallest fix. Stuff, a wash machine I can sell for $300 would need like a $10 part. It's a better return I'm getting in the stock market, if you don't count labor and all the other stuff. But, I started on YouTube, and you get to a point, though, you could over-rely on YouTube. I would look at YouTube videos, and at a certain point, a machine will act up, and I would go right to YouTube other than look at the machine itself. Because sometimes you can see a broken belt, or you can see what's broke. But sometimes if you get over-reliant on YouTube or advice in general, you forget to use your own eyes. So my advice is, when doing stocks, get the advice, put it in your tool bag, and try to figure out how to use it. But don't always go back to somebody else for the answers, right? It's you gotta level it out. You know what I mean? So that's my advice when it comes to like YouTube videos and getting help. But we all need help. But too much help is bad. Too little help is bad too. And finally, you will, after going through all these progressions, you will slow down, and you will gain wisdom. Because now you have a strategy, you have knowledge of how things work, and you actually see the market's playbook. Back to that Bill Belichick analogy. The market, you'll see the market's playbook. You'll see the market's playbook, and you'll give it to your defense, not offense. You'll see that earnings are coming up. You're like, ooh, let me buy a call option. I know it might go up. I'm gonna buy a call option, and I'm gonna buy a put option. So if it goes up either way, I'm gonna make money. Well, the market's already planned for that. They use theta against you. If you don't know, if you learn the options Greeks. Theta basically is your option value decreases over time. Every day it gets lower and lower. So you can't. It's not like buying a stock. Buying a stock, the price you buy it at, the price you buy it at. If it goes up and down, it goes up and down. But an option will go down unless the stock price moves. Case in point, if you buy, let's say, one share of Apple for it's trading much higher now, but let's say $100. It's even numbers. $100, and you buy an option at $100 strike for $50, right? And we're always attracted to what's cheap. Cheap is a trap. Be careful. So let's say earnings come out and Apple doesn't go the way you thought. You thought, is going to go over 100, which you'd make money on your option, but it goes down to 90. And you're thinking like, okay, so now you're negative on your option trade. You know what? I'll just wait and see if I'll just wait for the stock to go up. And I got plenty of time. Maybe you bought it out, 2 or 3 weeks out. And so let's say stock does go up to a 101. Now you're in the money. Oh, I should be making money. But guess what? Depending on the time, you're still negative because of theta, your theta burn. And they go negative quick, man. They go negative quick. So now, so I've learned to like look for theta. Watch out for the theta traps. There are things I took a bet on, like even if you do leaps. I mean, you can go do a leap and it has a $50 a day theta and only a $40 delta. The delta is, how much the option contract worth as it goes up by each increment, like $1 or $5 or whatever. But learn if you think if I'm talking Greek to you, learn the options Greeks. But there's a lot you have to learn. Once you think you know it all, there's more things you need to learn. So this is my video about the progressions of a trader. It's a little longer than I wanted to go. But my final point is listening to other people, like you're listening to me. Be careful with Facebook. I know, like I think everybody's first instinct. Let me go on Facebook groups and find a stock trading group. And your first thought is these are experienced traders that should know what they're doing, and maybe I can get some good stock tips. And now you do get good information, but use your filter. And remember, and your expectations shouldn't be these are all experts, because most people on there are not. And they're going through their own progressions where you get to a point where you turn $500 into $5,000. Let's say you got lucky and you did that, and you feel like an expert, and so you're on there giving people advice, and you're saying stuff. Oh yeah, man, Tesla, and then all of a sudden it goes down, and then you say, so it's a lot of stuff. It's progressions, man. So just be careful with listening to people on Facebook. It's not bad, but take it. I won't say take it as a grain of salt either, but you just need to filter it. And remember who's doing the speaking. They're just like you. They might be a few steps ahead of you, but they're just like you, and they make mistakes. And sometimes people just get happy, and you want to share your success with people. That's how I am. And in your ignorance, sometimes you're sharing the success, not knowing there's doom and gloom ahead because you're celebrating too early, or you need to get out of that stock because it's about to take a dump tomorrow. And you don't know how to read charts, and you don't see it coming, and so you're celebrating and you put it on Facebook. So these are the things I wish I had known when I first got started. But some lessons are just you learn on your feet, man. But like and subscribe to my channel. I'm going to come out with more videos, for people who there are people I'm sure that are well ahead of me on this stuff, on trading. But for people who aren't experienced as I am, I'm sharing my experience, right? It's kind of like that analogy, a second grader, I'll say a second grader is a scholar compared to a first grader, right? Now, I don't think that the gap isn't that short, but, I'm well ahead. So anybody who's new, even if you're experienced and you're just going through a frustrating period with selling stock trading, I'm just documenting my experiences, and I hope it helps you. And just like and subscribe, and basically my trading style is I'm a technical trader, and so I like math, and my background is finance. I'm about numbers, and the numbers don't lie, and the numbers help you at least predict. At the end of the day, we're all guessing. Right? None of us have the right to tell a stock which way to go. And so technical analysis gives you at least information to make an educated guess. I hate to even use the word guess, but it is what it is. It's the truth. And so technical analysis and reading charts. I like to use the MACD and RSI indicators. And so there are a lot of smart people that created things to help traders determine price action and trade better. So we're all a team against the machine. And so these tools are available. A lot of us just don't know that they are. So anyway, stay tuned to my channel. I'm going to give stock tips on the trades I'm making. I am I guess I'll consider myself a swing trader. I do a little bit of everything. I let the market determine how and where to make my money. Because if you only have one trading style, at some point it won't work, or it'll just work in these pockets of time, because the market is always moving around. Because once you think you've got it, you got its number and you know what to do. It's designed to change it up. It's designed. Again, we're playing another team. We're like a football team, and we've got a playbook. And if you keep using the same running play, like, at some point the defense is going to cater to it, and you're gonna have to change. They're going to stop the run, and you got to change it up. So there's a reason why, it's like the stock market. There's a reason why you can't just use the same play. You can't just run up the middle. You can't just run up the middle. You can't just throw deep bombs. If any of my Madden players out there, y'all know it, man. Everybody got that friend who don't know strategy, and all they do is throw bombs. They throw end zone. They're on 10-yard line. They throw 90-yard end zone passes and try to score each play, and they will. They'll hit a home run here and there, but for the most part, they lose the game. The score will be like you have like 80 points, and they'll have like 14. Because you use strategy, and all they did was, blindly throw, go for touchdowns. Base hits, sports analogy. While you're waiting for that home run, hit base hits. This is Reggie, and I'll see you in the next video.